Welcome to another special episode of Steady Lads. I'm Jordy, CIO of Selene Capital. Today we have with us Justin, the CEO of Astaria. We have Taiki, the humble farmer, and now he's full-time researcher as well. And unfortunately, Taiki was with us. I'll take the blame for him missing this time. I slept through the alarm, so we had to choose Jordy or Taiki, and this time we chose Jordy because I have a special guest with us. So I've invited Alwin from Vertex Protocol, and um, Alvin is usually spending his time, locked up in the basement coding. So this was a rare occasion to get him out in the world and actually interact with the man behind the, what I consider to be one of the best sort of code bases in the decentralized exchange space. So Alvin, thanks for joining us.
Yeah, thanks. I'm very happy to be on. This isn't a curtain, by the way. It's just wall painted over. This is a basement, so.
Yeah, like when you spend too much time in the basement, you have to kind of trick yourself that you have access, you have freedom. Like, oh, there's a window behind me, but you're saying there's actually no window. This is just like your mom put something down to make you feel like you're like a real boy.
Yeah, absolutely. So it's like very important to just stay in the basement or to be motivated to write better code. You know, Darius tries his best to keep me locked up, and it does wonders.
So for those of you who don't follow Alwin on Twitter, and I think unfortunately there's many people, you're like under followed account, and I remember when we met some months ago, you asked me to follow you, and you're like, okay, now I made it. Jordy's following me, so I think I have enjoyed following you. So you have this quote in your bio. You say that were you the youngest employee at Jump? Is that something that you actually?
Yeah, so I joined Jump Crypto full time when, yeah, I was 18. Um, so I dropped out of college quite early, and then I spent some time working, and then I ended up working at Jump as a software engineer.
You dropped out of college after like a month or like how old
Yeah,
when you're 18 or okay.
after a month. So when I was in high school, I was like very conservative, so I was very pro-Trump. So I actually ended up going to the United States Military Academy at West Point for college. So I spent a month at military school. It was like boot camp. So yeah, I ended up dropping out after that, and yeah, ended up just working in tech. And then there was ended up going to Jump, and then like one fateful day, someone by the name of SJ convinced me to quit my awesome career in trading, um, to ruin my life and live in a basement. So here I am today.
How long were you at Jump, you said?
So about 6 months. So between April of 2021 to like September of 2021.
And you started coding when you were like 3 years old, or like how did you like manage to have the skills for joining Jump at that point?
I think I started coding when I was like 15. So like there's this, I went to like a pretty nice high school in New York City, and they had like this mandatory programming course. So I remember taking that like second semester of my sophomore year in college, sorry, sophomore year in high school. And yeah, I really liked it. And then I ended up teaching myself some like random bullshit over the summer. And it's like sort of snowballed because I was like just really bad at school. And this is like a cool hobby that like, my parents wouldn't like, like look at me, I'm like Asian. So it's like if they see you coding on the computer, they're not gonna like beat you with like a belt. But like if you're like playing video games, they will. So that's how I got better at coding.
You're a good replacement for Thicky. He's usually our Asian quant here, so it's good. It's good to have you here instead.
Were you at Wormhole during the exploit when Wormhole, I think it was a few $100 million, but Jump ended up paying that out of pocket?
No, I had left Wormhole like a couple, sorry, I'd left Jump like a couple months before that. But I did write some code for Wormhole. Like you can see like my commits in the repo. It was not my code that got exploited. I remember like reading about the exploit and going like, please don't be my code, please don't be my code. And, hopefully it wasn't.
Like, what was it like just dropping out of college, joining Jump, and then just, I mean, it seems like you're not really afraid of risk. You're taking this unconventional path. Like, how does, like, tell me how, like, tell us, like, how does your brain work? Like, when it comes to, like, jumping through these opportunities?
Yeah, so I'm like I'm like incredibly retarded. Um, like I just, but like it's just like I try to do like what's like it's just sort of like the most fun path, honestly. And then like I do like run the expected value calculation or whatever, but like, yeah, I think like since I've left college, it's all been like I'm try to have the most experience, like put yourself in situations where like you learn the most. And it's like gradually over time, like you sort of just accumulate more responsibilities. And like there's like pros and cons to that, right? So like the pros is like you get to like be popular on Twitter and have like Jordy follow you. The con is that like you live in a basement, so it's like you have to weigh it.
What did your parents think about you living in the basement and just coding for this obscure crypto project?
Dude, my parents don't care. Like they just like they saw that I wasn't like a doctor or a lawyer, and they're like, "You're dead to me." Um, yeah, no,
You get no sunlight.
it's like yeah, exactly. I mean,
And you're
you will,
21, right?
yeah,
Wow.
Do you? I mean, we've talked a little bit about your code in the past, and I know you love to ship stuff, and I'm quite impressed with how quickly you ship. Do you manage the other engineers? Do you just let somebody else manage them, and you just do your code? And how do you actually kind of, because you're the CTO, right? Like, do you?
yeah. So I've like managed engineers before, so I've like managed teams from like zero all the way up to like 30. Um, I don't really like management that much. Like I prefer to spend a lot of time coding. Um, and like at Vertex, we sort of adopted this hiring stance where like we just hire like pretty smart, like self-motivated people and just like try and like piece together like, okay, what does the company need and what will these people find interesting? And like sort of just try and match it up. So I haven't had to do like a lot of management. Like like our engineers will literally go up to me and be like, hey, these are the things that I think we should do. Um, I'm gonna start working on them. Let me know if like I should do something else. So it's like we just like hired pretty well. Or I wouldn't say pretty well. We've made a bunch of bad hiring decisions, but we've made great firing decisions, and we've kept the good ones. Um, so yeah, like overall, don't really like management that much. Still do it a bit. Spend a lot of time coding, a lot of time like writing out specs and like designing stuff like architecturally. So it's like a
Mhm.
mix.
How big is the team at Vertex now?
So I think it's around like I think like 16 people. Um,
Okay.
like the team that I primarily work on, which is just like all of like our back end infrastructure, like the matching engine stuff like that. Right now it's like 4 people, and then like
Got it.
devs maybe like 8 people or something.
It,
Quite small.
I would have to say it's probably the equivalent of like 103 people because Alwyn, as far as I can tell, and I have experience with these things, Alwyn is like a 100x engineer. So you get like 3 people plus Alwyn, 103. It's not too bad. You can ship quite a lot of stuff.
Thank
You
you.
guys are one. Like, I mean, let's talk a little bit about the competitive landscape. So, um, I was looking at the Messari report. They put a report a few days ago, and it's impressively like in some ways up to date. So whoever out there doing the Messari research, kudos to you. They're even referring to like the $1.5 billion day that you guys had a few days ago. So it's definitely up to speed. Um, Obviously, like any derivatives report, usually in the last few years, will start with DYDX, and I think that might change, over the next months as you guys have been doing incredibly well. Um, so we kind of see, it starts with, what's been the market leader, I would say, until recently, which has been like DYDX, and then we look at this perp DEX here. You guys are in that middle kind of hybrid column. I think this is like a decently like comprehensive um, piece here. And one of the cool things about you guys shipping from the beginning was you really went for the FTX style portfolio margin, right? Like I don't think many of these, maybe Avo has some of that. Maybe like a few of these have like elements of that. But was that like technologically something that you had to spend a lot of time figuring out how to do this kind of portfolio margin? And I think um, the centralized exchange experience competing with that experience potentially is quite important to have that.
Yeah, it actually, I mean, it wasn't that tricky. Like, there's a lot of great products out there that like we're able to like half copy, half like take inspiration from. So like one really good product on Solana that has that is Mango Markets. So they have like cross margin across. Um, yeah, across like spot and futures. Yeah, I think they're like a fantastic product. It's like pretty sad what happened to them and how like a lot of things winded down, but they're like a pretty big, yeah, pretty big inspiration. and like a lot of the elements of our risk engine come from stuff that like they've worked on.
Could we talk a little bit about incentives? Because something Messari sort of calls out here is that Vertex's volume and to open interest ratio correlates with incentives. Can you just talk through your thinking about incentives and like where you think you guys will be heading with that, and what it and if incentives are like one of the largest drivers for perp adoption, or if you think there's something else going on there that people like are actually craving these products?
Yeah, I mean, incentives are just like a really expensive marketing strategy. The thing is that like everyone in crypto like sort of uses them. So like it's kind of hard to beat trading on an exchange that has like plus EV trading. Yeah, I mean, like we have incentives. A huge part of our like if we did not have incentives, yeah, our volumes would not be nearly as high. Um, but like at the same time, like it gets a lot of people to use our product, and it's just a great marketing strategy.
I'm happy to like talk about this because something I've gone through the first version of DYDX all the way through, and I've probably spent more time than any human alive on going through an incentive of DEX programs. Um, I would say like we've seen this with. I remember when DYDX came out some years ago, and the token once the token's live and the token gets priced, and people see that okay, the monthly token emissions are worth this much. You're fighting over this pool, and the amount of volume will start to like at least as a floor, kind of like the trading fees will start to at least match the emissions, and then usually you kind of go above that. And what you see with like a very successful token launch, like Vertex just had, last week, their TG after 7 months. Um, the market has to catch up to the dollar value of the emissions because it's suddenly like, oh shit, like they're releasing, let's say 1% of the supply. That's like $5 million. So like everyone just kind of like jumps in, and with DYDX, we saw this growth hack be quite successful, and this is quite different than what we see some exchanges occasionally do, even centralized exchanges, which is fake volume. Um, so like fake volume will be like when the exchange itself is sort of self-matching on the inside and doing this kind of stuff just to make the numbers look big. So this is very different than that. This is like actual independent firms paying fees, and just trading really competitively. And the good thing about what that does is it creates like a frenzy to be like super tight and super thick when you're quoting on the inside, and that actually in turn creates the best trading experience for users and funds because it gives the most competitive pricing. Um, so yeah, I saw this open interest stuff as well, and open interest is the sign of like potentially like large funds that just sort of put on basis trades. They buy spot and then they short perps, but not necessarily like having to be representative of like actual daily trading volume.
I mean, I think that the open interest will like sort of gradually creep up over time as we like onboard more retail users and like um, onboard like bigger funds. Yeah, one thing I like do want to address, like you mentioned, like exchanges like printing trades and stuff like that. Like we actually have like a pretty sophisticated like setup to like just monitor stuff like wash trading and like that type of manipulation. So like, I think like every single day or something, we like run a script that like creates like a graph of all the trades and like finds the strongly connected components. And like we very actively like blacklist wash traders from rewards. Yeah, it's just that like farming trading is like a different activity from wash trading, but like obviously like you'll see a lot of like accusations and stuff like that get thrown around based around OI and stuff, and um, yeah, it's like pretty good advertising for us to be honest.
Do you think like you're trying to, in a way, like vampire attack DYDX through like having a new token, having these incentives, and like this is a question for Jordy too. Like, what do you think about the like DYDX V4? I heard it's kind of clunky. At least, I mean, they just launched, but like, how do you expect, or like, what's your plan for Vertex to compete with DYDX and just slowly siphon away like bunch of volume and liquidity?
So like DYDX V4 is sort of like a different type of product at this point. It's a fully on-chain, it's this like wild experiment of trying to do what Serum did, but do it properly and not just have like Alameda like think Alameda was losing like 50K a day or 100K a day trying to trade on Serum and just dumping money. Meanwhile, like this token has a FTV in the 50 billion or something. I remember like when my FTT account was like giving me these locked Serum rewards and I was checking the FTV on it. It was something insane. But DYDX has taken the brave route of saying, okay, we're just going to go in that direction. So you have a centralized matching engine, and I'm sure Alvin can describe this a little bit, which is traditional exchange, and it's very efficient, super fast, very fair. That's the most important thing. Like it's a fully FIFO. You can to the microsecond just get people fairly in line, versus DYDX v4 and the Serum style where you're relying on the order book from the validators, and there's no objective order book like who was there first. They can just kind of like, obviously there's a lot of MEV that comes into play. So you're exchanging like neutrality in the sense of like there's no matching engine that decides. It's decentralized. You have that, but then you're giving up the ability for bad actors to take MEV. And DYDX is in this like style of, let's just go and try it, and hopefully we can social slash people and kind of force them in line to not take advantage. But it's quite a double-edged sword. How do you think about it, Alwin?
Um, yeah, I mean, like, I frankly, like, I just don't think that like trading L1s like work. Um, it's just like if you look at it from the perspective of someone that wants to trade, right? Um, you'll have like just worse. Like market makers will have a much harder time making like thin markets. Sorry, thin spreads on DYDX. And then like as like someone who's trying to trade on it, you're just going to get a lot worse execution. And then like what they get from decentralization is like maybe the probability that you get rugged is slightly less. Like it's just from like a product perspective, it's just not that great.
Yeah, I mean, I
Um,
would agree. Like you have the ethos of crypto of like trust nobody. You can verify everything on chain. The matching engine can't do anything fuzzy, and you're fighting against a product that works. I mean, DYDX v3 has been working great. They haven't been even been working on it, for a year because they've been just trying to ship v4, and it's just been plugging away, doing a ton of volume, working perfectly. And it's so weird to like see, a company like, let's say it was Apple or something, just have like the iPhone, and they're like, okay, we're just gonna like do a completely like different like redesign, and just like leave our blockbuster successful product to go. And kudos to those guys. I know a lot of things come into play with like you know um, having this like permissionless thing as well, and all the DAO and legal and all this kind of stuff that comes into these decisions as well. Um, let's see how it goes. I agree with you that it makes it a little bit challenging for quoting, aggressively and tightly, and having tight spreads. Hopefully, like this social slashing thing will work.
Jordy, can you explain why that would be the case? Why them being on their own chain makes it harder for you as a market maker to provide tighter spreads?
So their own chain part is totally fine. I think it's required just purely for the amount of like TPS and cheap fees. Otherwise, I think anyone that's trying to do this not on their own chain is like, losing their mind, because you're competing so much for gas. Like every single order, and Alvin maybe can explain the technical side of this as well. But when you have you have the full spectrum of like on chain versus like centralized matching, right? And sometimes you can just match on chain just the trades. You can batch the trades, or you can actually have every single cancellation, and if I just spam the book and I cancel at the back of the queue and just keep placing and replacing, you can have that on chain as well. But the amount of gas, if you're not on your own chain, is like incredibly expensive, right? So DYDX is fully on chain. Um, it's you have to do it on your own chain. That's fine. Like their design and going on Cosmos was probably like quite smart. The issue is just simply MEV, right? So if a validator stakes a bunch of DYDX, wins the blocks, can start proposing blocks. Let's say there's like a juicy trade that comes, they can potentially insert themselves and sort of sandwich attack that trade or take advantage of that trade in front of market makers. That obviously, you know, can be monitored potentially, not perfectly. You can't perfectly like understand if someone's being fair, and it's all about latency. Think about it from like a FIFO perspective, first in, first out. With a centralized matching engine, it's pretty clear. Like whoever arrives and hits like the gateway, you kind of put them in order. When you have like nodes across the world, you never really know who sent their order first because it's a question of like which node, which geographically, like where did they reach first, and who like kind of like relayed that first. So that brings in this like the referee can't be objective fully.
This would be a big bull case for their token potentially, right? So like the more DYDX you own, the more likely it is you win a block, which means you can extract more value. And I assume that's part of the value proposition they're offering here, right? Like this is a product.
Correct. I don't think it's part of their value proposition. I think it's a side effect, and they're probably against it. They
Hmm.
would prefer their value proposition to be simply like, people are spending gas, that that kind of like burns a token. We can put staking rewards now, like officially, as part of this process. You can get some of the trading fees, and that can somehow get passed through. I think the MEV extraction is something that, like, even though the Ethereum community and the Ethereum ethos is kind of like, oh, that's fine, like, let's give that to the validators and they'll distribute it to like Lido and everybody else, Flashbots, all this stuff. With a trading, what Alvin is referring to, and you can elaborate, is that as a market maker, it completely changes how tightly I'm willing to quote, and it ruins the trading experience if the MEV is too much, because like I will start losing money if I'm being taken advantage of, and so I'll go wider and wider to have like this extra safety net, and at some point that affects like the quality of execution. So that's what you're fighting on when you're like fully on chain. Do you want to explain a bit, Alwin, how you think about it?
It's going to be more difficult to trade on. Um, like if you're placed in order, you don't know like what happened to that order within like a second or something like that. Um, yeah, it makes it very difficult for market makers to like correctly price assets. And then that's gonna like impact retail users, where like they're just gonna get worse execution. And even from like a UI perspective, right? Just like waiting for shit to confirm, it's just not like that fun of an experience. Um, like if you want to be an exchange, like you're offering two things, right? One, make it so that people can speculate on what they want. Two, like keep your assets safe. Um, I honestly don't think that like a new blockchain like does either like well or like better than like alternatives.
Yeah, Jordy, I'm curious, like maybe you guys are looking into this or other market making firms that you're connected with, but are any of you guys thinking like this is your chance to acquire the DYDX token so you can sort of like own some of the block space on the chain and like be a better market maker and make more money that way? Or is that not something you're looking into?
I would say like here's the inside scoop, right? You have this like pot of gold that like it's there, this MEV, right? It's on chain now. You can start extracting. Um, Now like they're telling you, look, whoever goes and picks up that pot of gold, we're tracking you. They've created like a skip protocol. Was very familiar with tracking these things. So it was built a dashboard, and they're like, we're going to be watching and comparing your P&L until like what we think a fair P&L which would be. And if you pick up this pot of gold, we will like smack you, and like we will take all your DYDX tokens that you've used for your validator, so you're gonna get slashed. So like right now, no one. It's just been launched 2 days, right? Like the rewards on DYDX V4 have just launched. No one's picking it up, and from my perspective, like I would prefer if it's fair and nobody. I would love to live in a world where like this MEV stuff just didn't exist, and there's no pot of gold. So as a firm, we are like one of the large participants in DYDX. I would say that like my hope is like nobody goes for it and we don't have to play that game. It's a different game. It's You're kind of getting into like the Uniswap sandwiching game, which is why I do say like DYDX4 is just a different product than things like Vertex and RapidX and all these other exchanges, because it's like Uniswap. It's like you're willing to give up the quality of execute, like you're giving up some stuff in order to be like using the fully on chain decentralized Uniswap type of thing, and that's why you're not using something like Binance. You just kind of obviously Binance will give you better execution than Uniswap, right? The fees are lower, everything else. Um, so yeah, I mean, from our perspective, hopefully nobody goes for it. If they find ways to not get detected and we start detecting it, even though the official dashboard that's supposed to be tracking it does not track it, um, we have to maybe like look at competing and staying competitive and doing that kind of stuff. But for now, we're hoping it's not necessary, and the only reason to hold the DYDX token will just purely be for the economics of it.
Well, you are Mr. Game Theorizing, and it seems to me that this is just prisoner's dilemma, right? And we're going to see how it plays out. But like theoretically, someone's going to defect, right? And then it'll be very interesting to see how people respond.
So not necessarily. I think um, if the referee is doing a good job and the punishment is sufficient, I joke sometimes with some of the other market making participants. I'm like, we should stage this like false flag attack to because like we don't want anybody to go for this gold, and I'm like, we should just have somebody do something stupid and then socially slash them in a very public way, and we just kind of put it in all the news sites that somebody got like super slashed just to
But
discourage this from happening.
it's sort of a really tough issue for, I don't know if this is managed by a DAO. Seems like it is, but if you socially slash, you're handicapping the value of the token significantly, right? So it's a very interesting thing. If you take too heavy-handed approach, it's sort of like making this like a socialism-ish friendly chain, then the token's not worth much, presumably, and then like there's going to be less volume, less traders, less activity, less stakers, etc. So yeah, seems like an interesting dilemma, but it's a really fun problem to think about. I hadn't really thought about it that way, so thank you.
I mean, socially slashing can even be bullish to token. You can take those tokens from somebody from like a validator and just burn them, and when you slash them, and then like
But who's
you're
going to
like
compete
reducing
for the coin then? It's like,
the people that are just looking for the economics. Ultimately, like I don't know how you see it, Alwin. The economics of the token come into play, and if there's people trading and there's fees generated, and that somehow gets passed on to the token, that is ultimately gonna make people buy the token. I think right now, Vertex has uh, like an 80+% APY on staking the token. So that is very compelling from a purely why should I buy this token standpoint, right? Like Synthetics, I think has had this same program for a long time, and their APYs are in the low double digits usually. I mean, the only other way we've seen tokens be used is something like BNB, where you're sort of forced to hold the token in a certain amount of size in order to get trading fees discounts. Um, that's like a centralized exchange model, obviously. Um, I think even DYDX had something like that in their V3, where you had to hold a certain number of tokens for extra discounts. Do you think about something like that, or volume tiers, or trying to differentiate the fees, or do you just so far you've just taken like a flat fee approach?
I mean, like in practice, like redistributing some of the staking yield is like a fee discount. Um, so like if you own like, I don't know, 10% of the staking pool, that's effectively like a 5% discount on your fees. So it's pretty similar. Like we can experiment with like different fee structures, but like we're quite happy with the way it currently is right now.
Like to my knowledge, like Vertex was originally on Terra, right? So like, what was it like pivoting from just being part of this ecosystem that kind of blew up, and then just pivoting to like some application on Arbitrum? What was that process like? And how do you persevere as a builder? Maybe it's a question for Justin too.
Yeah, I mean, like it was a lot of work. Ultimately, I think what happened was like we went to a lot of our investors. And like first things first, like we totally could have just like kept our fundraise and just said fuck you. Like that was like totally legal. Um, but we ended up going to a bunch of investors and like going like, oh okay, like this thing blew up. Like if you want your money back, just like let us know. And basically everyone like went like, yeah, we don't want our money back. Um, and at that point, like we had already built yeah, just a lot of stuff relating to the risk engine. And we just spent some time thinking about it, and we were like, okay, like it's probably not that hard to like just pivot to like a general perp dex, and we think that there's like an opportunity here. So like we just decided to take it. Obviously, it's like really demoralizing when like you've been working on this thing for a while, and like everything sort of instantaneously became useless, right? Like we had to like sort of fire the vast majority of our team, and like we ended up rebuilding a new one from scratch, and that one was actually ended up being like both much cheaper and much stronger. So I'm actually like very happy with the way like things turned out, and it was just like a wild ride where like I learned a lot. Um, my co-founder learned a lot. Yeah, in terms of resilience, I would just say that we're just like as a team, we're just like pretty hungry. Like we want to get things done.
Can you like can you tell people exactly what were you building on Terra? It was kind of different stuff. Like how did you kind of like transpire along that path?
At the time, like so, Terra's L1, and it was like a very special L1 because it had like built into the L1, there was like the ability to swap between like different stable coins. So it wasn't just UST, they also had like EUT, KRW, and stuff like that. So I had like a stable coin for like every currency that you could hold like without going to jail. Um, so what we wanted to do is we wanted to bring like more utility to like a lot of these different stable coins because like in practice like there's probably demand for like a euro denominated stablecoin, and like to have things denominated in euros because Europeans like they use crypto, um, but like there just wasn't any liquidity. So what we wanted to start out with was just like set up like a forex perpetuals on Terra, and that would sort of allow people to like hedge out currency risk and stuff like that, which would actually make these stablecoins useful. So one example of how you could use that is like at the time on Terra there was this lending protocol called Anchor, um, which was the most popular protocol on Terra. Um, and effectively it let you like deposit UST inside for like a 20% APY. And like with like a liquid perpetuals exchange, what you could do is you could like allow people to deposit euros into Anchor. And what we would end up doing is we would swap those euros into UST, deposit the UST into Anchor, and then hedge out that currency risk. Um, so like we thought that there is just like a pretty big like yeah, vertical for growth there.
Do you still think that there is like any interest in like sort of on chain FX perps or FX things, or do you think that there's just not that much product fit, and the people who are looking for FX hedging just do it with the traditional FXCM type of brokers?
Like I think that there's still opportunity. It's just a lot harder to exploit. Like Terra was really special because you could like swap UST into EUT with unlimited liquidity because it was just built into the chain itself. Um, and that's not a thing that you get like anywhere else.
Was there like just to understand the mechanism, like the way you could swap it was there like an oracle, kind of like
Yeah.
referencing? Was it using mirror or like using some real world price?
Yeah, so you know that like mint burn mechanism between Luna and UST, right? Like that also
Oh, we know
worked with
it. We
like a
know it
bunch of other
well. We know
stables.
it well.
Yeah.
I know it very well.
So that also applied to like um just a lot of other like less known stables. Like I actually think that like their first stable was like Terra KRW or something. Um but like UST became like what they ended up like running with. But everything else was still there.
We have a really interesting panel here because, Jordy market makes on these perp platforms. Alwin, you're building them. And then I know Taiki has historically been a big LP in GMX and also just a user of these products. So I'm curious, like Taiki, when you're looking at these products, what's the differentiator for you when you're trying to decide where you want to LP, which you're comfortable using? Like in your mind, are all of these platforms sort of the same, or are there different features that you're looking for that are differentiating them?
And from my perspective, I just look at the risk and how much I'm being paid for that risk. And GLP was a simple product because, it was, I kind of viewed it at the time as a crypto savings account where I don't want to hold cash. I'd rather hold GLP or even try crypto on Curve where I'm earning 10 to 30% APR on 50% stablecoins, 50% like crypto exposure. I purely viewed it as like a savings account with not that much downside risk.
How about the basket of it? Like, do you view the basket of specific products in GLP as something that you wanted to hold, or something that you should hedge out? Because it kind of tells you specifically like how much Bitcoin, ETH, etc. In that basket. Maybe that's not the same as what you would normally hold.
Yeah, for example, like on Avalanche GLP, it contains AVAX, and I don't want exposure to AVAX. But like one thing I could, one thing I did do during like last year and like also this year was I would use Ether as collateral. I would borrow AVAX on Aave and use that AVAX to buy GLP. So if the value of AVAX goes down relative to GLP, then I profit off that trade, and I also earn like the fees. So it was kind of a way to hedge out my portfolio, and it was like a I call it like the farmer's hedge because you short AVAX and then you long GLP, and then you're being like whatever borrow rate I'm paying for AVAX, I'm being compensated for by like GLP fees. So I would kind of view it as like a portfolio construction, like a way to construct a portfolio, and I guess it's like a trade. I know like something like that is not possible on Vertex. I just like GLP because as a retail investor, I don't have the knowledge that Jordy has. I can just say, hey, like, I can just buy GLP. I understand it, and GLP was a simple product because yeah, like, it's simple to understand.
Yeah, but there is no like free lunch, right? It's like when you look at these like yield bearing, GLP type of assets, the only way that they can get enough yield to pay you, your 25% or whatever you're looking for is ultimately like through having really high fees, both trading fees, and I think with GMX is like the V1 case, there was like a massive borrow fee. You didn't realize, but like if you went long and then you went on holiday and you came back, you might have gotten the position directionally right, but you'd still get liquidated because just like the amount of like borrow fee that you're paying on the leverage would be like more than like anything you could potentially make in profit. So it was very much like a degen exchange, and they have this kind of like decision to make between like a good trading experience and a good staker experience, and you have to move money from one to the other. That's sort of like a tough decision. I think with V2 they've gone more towards creating a better trading experience, which I think is more sustainable in the long run, because really having these like crazy fees will not work. So kudos to them for at least trying to think about the traders more, because ultimately that's your customer, and you have to be competitive there. I mean, Alvin, I did see that you guys do have some collaboration with. We're seeing these like vaults, sort of like market making on the chain. How does that work?
Yeah, so like yeah, I think we also realized that um like retail users just really like sort of like a static yield product that you can park your money into and have them work on the exchange. So like the way we've sort of done that is using Elixir, um, which is like this decentralized market making protocol. So I think right now they're responsible for maybe like $9 million of TVL on Vertex, and what they do is like they just place like fairly wide markets on Vertex and just market make using people who deposit into them, and they act like backstop liquidity. Um, and even though like I don't know if like these pools in particular are profitable, but like they're definitely profitable like post rewards, which is what their business model is doing.
So from a farmer perspective, you can get the yield. You can just kind of do this GLP experience. You can try to figure out which pool you get the most value in. But yeah, like ultimately, in a competitive landscape of an order book, Elixir themselves, and maybe we can talk to them at some point. But they're going to have to make the actual orders that they're sending be profitable, because they can't
Yeah,
just like finance with tokens indefinitely.
yeah, it's quite hard to like be profitable trading on an order book, especially when you want to be decentralized. Um, so they're like solving pretty hard problems over there.
Jordy, I'm curious about this. So Elixir is sort of, I don't want to talk badly about them, but it's sort of like an unwinnable product, right? If it's decentralized, then the strategy is public, and if the strategy is public, they can't profit from it. And if you know, I suppose they could do it in a non-decentralized manner, but I don't think that's the product they're offering. And I mean, they're doing everything on chain, right? So it will be visible eventually. Is that the right way to think about it?
I think it's okay. Like ultimately, like there is a segment of trades that the cost of capital can be different. Like for a trading firm like us, our internal cost of capital might be like really high. We don't want to pick up a 20% APY. We would just like put it somewhere else. Like our return on capital is, let's say, like minimum 40%, right? So there's these like opportunities, like maybe what they're doing is like waiting for blow throughs. Like somebody just like puts like really big trades and their backstop liquidity, they get like a really juicy fill, but maybe it only happens like once every like 2 months, or like once every like 4 weeks. And so like the APY on it is not going to be that high, because yeah, they're making like 3% every time it happens, but it happens like once a month. We're not going to be willing to just sit there like super wide waiting for those trades. So there is potentially a niche that they can play. It's quite different than, I think, on Hyperliquid. There's a very competitive. I think that quality of that bot, like the market making bot, there is very high. It's probably like something that could compete with market makers, given what I know about the that team and Jeff and his background in HFT, and the quality of something like that might be higher than Elixir. But yeah, I think maybe there is a sort of like a 20% APY possible, that market makers are not willing to sit around and wait for.
Yeah, and to like give you an example of all the source code of like Uniswap is public, right? But like Uniswap LPs do like decently well. GLP also does decently well, and like that's also public.
Yeah, I think if Thicky was here, he would argue a little bit about how well the Uniswap LPs are doing. He's he's been doing some analysis. That's been not too bullish, but I mean, let's close this segment off. So, Alwin, like, is there some features? I know, like devs, you're in your basement, you're always just like looking to ship stuff. Um, are there like next features that you're just trying to get out? Like, what is like the next product roadmap look like for you?
Yeah, so like what we want to do is just scale to a lot more products better. So like right now, a downside of the cross margin system, like right now everything's like cross margin, right? But that means that we can't really list like long tail assets that well. Um, so a big push upcoming is to just overhaul our risk engine. One is to like simplify the code of that because we made a lot of mistakes on the way. Um, and then yeah, make it able to process long tail assets, make it a lot more like more able to take on like yeah, the risk of long tail assets. Just like figuring out how to do that. And then the other thing on our side is just like on my side especially is to try and like mitigate existential risk. So stuff like making sure keys don't get hacked and like taking a really heavy security mindset around everything. Like ultimately the job of the exchange, like we just need to do two things decently well, which is to like make traders have a nice experience and like not make traders lose everything. So just pushing on both of those fronts basically.
That's actually a great segue into our pasta of the week segment, because a certain exploiter has been starting to um, give us some demands. So now that you mentioned about avoiding getting taken advantage of by exploiters, I think we're about to see some interesting pastas. I stole it from Justin, so sorry, Justin. I think everyone's been clamoring for this pasta, but yeah, let's go to pasta of the week. And we'll start off with my pasta that I stole from Justin's pot as he was cooking it. So we have the Kyber swap exploiter giving his list of demands. And first of all, I think even like his previous message was even more memeable, where he says, "Guys, like I'm pretty tired. I'm just gonna take a nap, and you guys behave, and I'll come back in a few days, and we can negotiate and discuss." So he's had his nap, or he's had his beauty sleep, and he feels rested because, oh boy, his demands. He's basically asking for complete executive control, and he wants to insert himself as the Kyber director. So if anybody wants to discuss with him, he is given his Telegram name. He is Kyber director, and he wants you to give the control of the company to him, buy out people, and this is his. As you can see there, he says, "This is my best offer. This is my final offer. I require my demands to be met by December 10th. Otherwise, the treaty falls through."
I love how he calls it a treaty.
It's amazing. But if I was a token holder of this Kyber network token, which I don't know who's still holding this thing, I would be like, fuck it, let's go with this. Let's give it a try. Like, token holders and investors, under this treaty, your tokens will no longer be worthless. I mean, this is gold. Like, this is who you want running the show, right? So I think it's a win-win-win, right? He said, employees, your salary will be doubled. Executives, we're going to buy out your coins at a fair valuation. I mean, this guy really seems like he could turn the ship around at least better than what's going on over there now. So if I had a big bag of Kyber, I'd probably just say, fuck it. What do I have to lose? Let's give it a try. So
It's
I thought
very,
it was a brilliant post.
it's isn't it a bit crazy? Like he's negotiating. Usually, like when these guys negotiate, it's because they don't want the legal risk. They just want the 10%. give me my 10%, give me like this like legal whitewashing, and I'll go away. In this case, this guy's negotiating just to like take over. I mean, it's as if Martin Shkreli and Napoleon had a baby, and like this guy just like was really good at hacking.
And he also says, if I get contacted by any agency from any of the 206 sovereignties, or I guess that would be 206 countries, I'm going to give you a $0 rebate, or zero rebate on your coins, which I think is hilarious as well. So it's hard to be mad at this guy. Obviously, I feel a little bit different if I lost funds, but this was really just a phenomenal post and hilarious.
Yeah, what are they gonna do? Arrest him?
Well,
Yeah.
then your Kyber gets burnt. It's all going to zero.
I mean, flashbacks to Avi here. I love how in the LP section, the rebate will be 50% of the losses you've incurred. I know this is probably less than what you wanted. However, it's also more than you deserve.
I mean, he needs the other 50% to like buy out the executives and like double the employee salary. So it's quite reasonable.
So if you're looking for a job, you can get 2x the market rate on your salary by going to work for the new Kyber director. But this is going to be a fun story to track. I mean, I'm very curious. Like this guy's probably going to jail. I think they probably will find him. It's a pretty significant amount of money. But if not, I mean, just imagine if this is the thing that turns the Kyber ship around.
I'm still not sure if he's trolling or if he actually wants to take over this company and he imagines that he can, in a decentralized manner, actually deal with things like, salaries and employees and bank accounts and like all this stuff, and remain completely untraceable. But maybe he's just LARPing. I have no idea. This is popcorn worthy pasta of the week. Hopefully things get resolved well for all the Kyber LPs, and maybe the fat cat executives need to go. I don't know. I'm not sure.
The fat cat Kyber swap executives.
Oh, okay. We'll keep an eye on how those negotiations go. But Justin, I stole your pasta. Do you have a backup one? Hopefully.
I do. It's pretty good, but again, I don't know if it can compete. Like, I think I'm still gonna have to vote for yours, Jordy, just because that was so brilliant. But mine is this video of Elon Musk has been going around. Honestly, the whole talk is amazing. It's about an hour and 20 minutes. It's on YouTube as of today, so I recommend you listen to it if you're interested in tech, Elon, etc. He's pretty unhinged in it. But I'm just gonna play this video because it's so hilarious and it's truly right out of the Silicon Valley series. So let's give it a listen here.
So I will certainly not pander. And Jonathan, like the only reason I'm here is because you were a friend. Like, what was my speaking fee?
So you're not making any. First of all, I'm Andrew, but
yeah, sorry.
it's okay. Second of all, we've known each other for a very long time.
So in this clip, Elon's saying, "I'm only here because I'm your friend," and he doesn't even know the guy's name, which is hilarious. They've known each other for over a decade, I think 16 years, and he gets his name wrong, which is absolutely hilarious. And it truly is out of a Silicon Valley sketch. But yeah, I thought it was absolutely hilarious.
Do you know if he was trolling or if he was actually just like?
I would recommend if you watch there's a full couple of minutes about this, and it does not seem like he's trolling. He sort of says, "Oh, like I'm not running on a lot of sleep. I'm busy." But yeah, I knew your name was Andrew. So I don't think it was a troll. I think it was genuine. But he's very unhinged. He's dropping F-bombs in the interview, telling Disney executives, specifically saying "fuck off" to Bob Iger. It's a very fascinating interview. So I might lose Degen of the week, but I'm definitely giving the audience something to spend the time or their weekend listening to. So
I love how he's like the only reason I'm here, Jonathan, is for you because I care about you so much, and I forgot your name, but I really it's like when in these like series, like in these movies where the guy's like dating the girl and he's like, "Oh, I love you, Kimberly," and like her name's something else.
Jordy, I could see this being used someday when you guys are crushing it in 10 years, crypto's well mainstream, you're the largest market maker. I could see this. So I'm calling that prediction now when you're on Dealbook.
I think that's a very solid replacement. Alwin, did you come with a pasta? I don't know if you're prepared.
Oh yeah, so they prepared me at the start of this call. They were like, find something on Twitter that you thought was funny. So I like barely use Twitter, but one of my team members sent me this thing. I guess we should play the video, otherwise it's like less dramatic. I want to see the washing machine like slowly skate across the floor. But yeah. So I think it's about someone like asking about why our volume's so high, and then he's got this like washing machine spinning around. So my yeah, one of my like one of our community members sent it to me.
Wash
And it was like quite funny. Yeah.
What do you think about this when you see it? Do you see it like, do you just find it funny, or it's like, oh, free marketing? Are you offended, or?
I mean, yeah. I mean, it's like pretty funny. I mean, yeah, it's like free marketing. We're pretty thoughtful when we like think about like bad actors on our exchange, and like we have like all the mitigations in place. And yeah, I just see it as like people like advertising us to our target audience.
Alwin, I feel like you're like 90% of the way there for being like fully media trained. Like you've got the right answers. Sometimes you go a little unhinged, but other times you got like the perfect answer for things. It's great.
Oh, dude, it was like, dude, every like second of this, I was like just pushing back my desire to just drop the R word over and over and over again. That's like the remaining 10%. So
I mean, Elon is not holding himself back, so why should you? Maybe once you guys like make billions of dollars, you don't have to hold back and go on stage and
oh, dude, once I make billions of dollars, that R word dropping will be automated. Like I'm gonna have like an entire system set up. It's gonna be fantastic.
So just a quick note, Steady Lads does not endorse anyone we bring on. You know, we're not endorsing the words they use or the comments they make. We're just providing a platform.
Actually, in the text that you guys sent to invite me on, you explicitly said that this comes with an endorsement of everything that I say. So.
God damn it, Jordy.
Oops. I think our Steady Lads lawyers might have dropped the ball on that one. So sorry, I guess we have to endorse. So
That's a shame. This podcast probably was making billions of dollars, so the loss of revenue must
make $0.
Must be hard.
Well, no, we have negative revenue because you have to pay all the costs and
we're pre-revenue, Jody. We're
pre-revenue.
But if you have no revenue, you can say you're pre-revenue.
We have not turned on the fee switch yet.
No. We haven't voted yet.
No sponsors, no ref links, and unfortunately no ads either. So we have no revenue, but we eat the comments. We wake up every day. We look at our fans' comments, and usually they're either about Thicky, very positive, or very negative. So that's why we do this. We just do it for the Thicky comments.
Dude, Thicky looks like a K-pop idol. It's crazy. I didn't expect that.
Yeah, Alwin, you got to get the hair thing. You got to like follow you just kind of do like
keep him in the basement.
Dude, here's the thing, right? Like, I went to a bar yesterday. I got sexually assaulted by a dude at that bar. I have to cut the hair, man. I have to cut my hair.
Wait, you were outside? That's so bearish.
Oh yeah, dude. The one time,
sell Vertex. Sell.
But if you think about it, maybe that guy, by molesting me, he scared me into going back inside forever. So maybe it's not actually a bear signal. Who knows?
Bye, Vertex.
Bye. Yes.
The devs will never go out again.
That is a true story. Like I did get groped at a bar, and I think it was because of the long hair. So I will have to cut it.
We have to ask Thicky next time if he gets groped sometimes, or if he's able to manage that. So Thicky,
dude, I would grope him myself. So it's probably a yes.
The CTO of Vertex gropes Thicky. Thicky thought.
CoinDesk doesn't listen to this.
Taiki, finish us off. What's your pasta this week?
Okay, I feel like that entire conversation was a pasta, but there's this new upcoming documentary called The Highest of Stakes, featuring Richard Hart, and you can pre-order it for $15 coming. I mean, I don't even know like what even this thing is, but Justin, I think the IMDb reviews for this documentary, and the ratings are very, very high. I think it's like 8.6 out of 10. I wonder if it's like a bunch of like hex holders just like voting 10 to pump their bags.
It's only 700. What is it? 788 votes. So like, I mean, there's more hexicans on Twitter than that for sure.
I mean, I just like find this hilarious. I think the SEC tried to charge him, but they couldn't find him, and then he's like dropping documentaries, and I don't know. I feel like this guy is.
I have been aware of this because I'm friends with Eric Wall, who has taken part in this documentary. And my understanding, this is an independent documentary, and I don't think it's like super It might not be as effusive about praising Richard Hart. I think it's kind of showing different sides. And Eric Wall is obviously like a master troller, and he's been trolling Richard Hart for a long time. And he's in the documentary. I haven't watched it, but I am actually looking forward to. I don't know if I want to go through the process of AWS, Amazon service, Prime and whatever. Hopefully, somebody just puts it on YouTube and I can degen it with my morning coffee. But I don't think it's going to be a propaganda. It might actually be a fun, legit documentary, and I'm actually excited to watch it. I don't know if we're going to actually get a Terra one. Do you think, Alwin, that the Netflix guys are going to do Terra one, or did they just skip over Terra and go straight to like the FTX stuff?
I think there was like a pretty nice one on YouTube, but the thing is, like, Terra was like a very like Asian phenomenon, right? And like Hollywood just does not fuck with Asia, so yeah. I hope there's a Terra one. It would be a lot of fun.
Have you seen Crazy Rich Asians?
I have. It's like the one exception.
Hollywood.
Like they throw us a bone like once like every like 5-10 years.
Fair enough.
We could get a Three Arrows movie, because you have like you have the west and east kind of coming together for that one. I'm curious, like all this memeable things that happened during like the crypto bear market and then the bull market. What kind of dramas we're going to get out? I'm pretty sure that Netflix documentaries are going to start coming in pretty fast and furious. There's a lot of demand, I think, even for things like, obviously FTX has like a book and multiple books, right? Like there's the Michael Lewis one, there's the Bloomberg one. So I'm looking forward to some of those reenactments. And yeah, like with Terra, and I mean, unfortunately, the best that community has managed to recover is like this like Luna Classic stuff, which has managed to get like relisted. Someone is like trying to repeg. I don't know if it's Fat Man Terra or someone's like trying to repeg UST back to $1 and trying to do some burn mechanisms to make that happen. I don't know. Like we'll see if that ends well. I think the Solana ecosystem has managed to bounce back from FTX, but I don't know if trying to repeg UST is going to work out as well.
Either way, like, dude, USTC is still worth like 10 times more than Vertex. So it really, I don't know. I just keep that in perspective at all times, Anytime like any bit of ego gets to my head, it's like, yeah, no.
That's good. That's good.
I'm not very bullish like a repeg. It's like kind of hard to like, unless like they do something where like they just delete a bunch of people's UST or like they make it like 100-1 or something. Yeah, and like they have to change the mechanism too.
And there is no like I guess like is the chain active anymore? Like I haven't used my Terra wallet, whatever it was called, Terra Explorer.
Terra
I haven't used
Station?
that. Yeah, I haven't used that ever since I kind of panic exited UST as things were collapsing. Is that still being used? Is that chain kind of active, or do you have any idea?
I don't know. I would guess probably not. Like I don't think there's like meaningful economic activity on that chain. At the same time, like, is there meaningful economic activity on any chain? Who knows?
That's pretty meta. And cool. So like we have 4 like very solid pastas. I would say like this week it's a tough competition. Alwin, since you're the guest, like which one is your favorite pasta out of these 4?
Which one? The Kyber Swap Exploiter one was a pasta, right?
Yeah,
that one
that
was
was
like out of
Stolen
this
from my
world.
hands.
It was fantastic.
I exploited Justin's bookmarks to get that pasta, so it's epic. It's poetic, and thank you. I'll take this victory that I snatched from defeat. Anyway, thanks for joining us, Alvin. Looking forward to as you guys just keep shipping in that basement. You've done incredibly well. I think people that have used the product know it's one of the best ones, and yeah, looking forward to seeing how you guys do in 2024. Thanks everybody, and see you next time.